Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. Currency markets, euro dollar 111.78, that's popped a little bit higher. Dollar index 97.667. Japanese yen is where everything's been happening, 108.32. Swiss franc 0.9960, the pound 126.46, the Australian dollar, that's been rebounding, 0.6955, India rupee 69.4175, South Korean won 1183.07, the Rial 392.33, Egyptian pound 16.7889, and the Rand 14.59345. The Rand is the canary in the coal mine. This is a dollar index chart from Simple Trends. We're in a bit of a backing and filling phase, but we'll start going higher imminently. Euro dollar 111.78. I'm still of the view we're headed to parity. Dollar yen, the big mover, 108.32. Simple Trends, whose chart this is very bullish about the yen. Here's what could happen if the yuan slips to 7 versus the dollar. Currency was down 2.5% in May, worst drop since July, biggest loss in Asia, touched a 5-month low of 692. What's different this time is the intensification of trade tensions. When we look at all the tools that China has at its disposal, an adjustment in the yuan is the easiest one to use. The trick is to achieve it without scaring the rest of Asia. He added that the yuan may slide to 7.13 if China and the US slap more tariffs on each other's goods. The odds of a tumble beyond 7 within a year have doubled over the past month to 39% following the recent weakening. I do not think the PBOC has a line in the sand at 7. The PBOC may increase its tolerance of a weak renminbi that is driven by market forces. I wrote about this on the 27th of May. And I said the Chinese currency minus 8.8% year-on-year basis is surely a very visible proxy. If all this turns ballistic, then this is going to fly through 7, and the Chinese will surely use the value of the currency as pushback. If they do, they will be pushing at an open door. It is clear that directionally money wants to leave China, and a great deal of the 2019 surge in Bitcoin is surely correlated to Chinese flight capital. Therefore, my prediction is when the currency slides, it's going to slide real quick, and dollar call options are an interesting risk-adjusted trade. China is going to have a tough time maintaining 5% GDP growth without a lot of top-down investment, more so if consumer sentiment takes a hit. Let's move on to commodity markets. This is the CRB commodity index, and essentially what Raoul is saying there, it's at a very important point. If it falls through it, it's going to crash. Crude oil, we've had a rebound, $53.95 last. On Friday, it fell the most since December, at one point down 6%. Gold went in the opposite positive direction. It's up $12 now, $1,317.